Hey everyone, welcome back to Corporate Decoder. Today we're diving into a filing that might sound like corporate snooze fest, but trust me, it's got a secret twist. Or maybe just a small change in value. We're looking at Blue Owl Capital Corporation 2 and their latest update. In short, it involves a slight adjustment in the price of their shares issued under their distribution reinvestment plan. What does all of that mean? Let's break it down. This report is dated April 29, 2025, so it's pretty current. That's the date of the event they're reporting. The main point of this report is a change in the company's net asset value per share. Because of this change, the price of shares issued through their distribution reinvestment plan will now be $8.63 per share. Think of it like this. If you're reinvesting your dividends to buy more shares, each share will cost you $8.63 per share. The report was signed on May 2025 by Jonathan Lamb, who is the Chief Operating Officer and Chief Financial Officer of Blue Owl Capital Corporation 2. Basically, he's one of the main people in charge, making sure everything runs smoothly and that the money is accounted for at. So what does this all mean? Let's break it down in plain English. First, let's talk about a distribution reinvestment plan, or DRIP. Many companies offer these plans which allow investors to use the dividends they receive to automatically purchase more shares of the company's stock. Instead of getting cash, you get more stock. It's a way to compound your investment over time. Next is net asset value, or NAV per share. This is especially important for investment companies like Blue Owl Capital Corporation 2. NAV represents the value of a company's assets minus its liabilities, divided by the number of outstanding shares. It's basically the book value of each share. If a company has a lot of valuable assets and not much debt, its NAV will be high. Blue Owl Capital Corporation 2, like other business development companies or BDCs, focuses on lending to and investing in middle market companies. Their NAV is a key metric for investors. A change in NAV can reflect how well the company's investments are performing. If the investments are doing well, the NAV goes up. If they're struggling, the NAV goes down. Now, why did the price change? The filing states that the share price for the distribution reinvestment plan is directly tied to the company's net asset value per share. When the NV changes, the price of shares issued through the DRIP changes too. This ensures that investors are buying shares at a fair price relative to the company's actual asset value. So what's the big deal here? Why should you care about a small adjustment in share price? Well, it's all about transparency and fairness. By linking the DRIP share price to the AVE, Blue Owl Capital Corporation 2 is ensuring that investors are getting a fair deal. It prevents the company from selling shares at a price that is significantly higher or lower than their actual value. This is a good thing for investors because it helps protect their investment. Also, this change gives us a little peek into the financial health of Blue Owl Capital Corporation 2. If the NAV has changed, it means something has happened within the company's investment portfolio. Maybe some investments performed better than expected, or maybe some faced challenges. This kind of change prompts more questions. Has the company been making smart investment decisions? How is the overall market affecting their portfolio? Now, let's step back and put this into a broader context. Blue Owl Capital Corporation 2 operates in the world of business development companies, which is a specific corner of the financial market. These companies provide capital to smaller, often private businesses that might not have access to traditional bank loans or funding. BDCs can be a higher risk, higher reward type of investment. They offer the potential for strong returns, but they also come with the risk of investing in less established companies. For current investors in Blue Owl Capital Corporation 2, this change in share price might be a minor blip. However, it's always a good idea to stay informed about these kinds of adjustments. It shows that the company is actively managing its share price in relation to its asset value, which is a sign of good governance. For potential investors, this could be a point to consider when evaluating the company. How consistently has the AVE been changing? What are the trends? This information can help you make a more informed decision about whether to invest in Blue Owl Capital Corporation 2. In conclusion, while this 8K filing might seem like a small technical detail, it actually tells us a bit about how Blue Owl Capital Corporation 2 manages its share price and how it values its assets. It reinforces the importance of understanding what you're investing in and staying informed about the factors that can affect the value of your investment. Blue Owl Capital Corporation 2 seems to be keeping things transparent by adjusting their share price in line with their net asset value. This shows they're aiming for fairness to investors, which is always a positive sign. One thing to keep an eye on is why the ender changed in the first place. A steady NAV is usually a good thing, but big swings either way might mean it's time to dig a little deeper to understand the overall financials and strategy. Thanks for watching. If you found this breakdown helpful, give us a like, drop a comment, and don't forget to subscribe for more corporate deep dives.